Good afternoon, everybody. Welcome back to the Opportunistic Trader. It's noon on October 17th, and we're joined by Tracy Shuchart, independent trader for us who comments a lot in the energy area and the equity room. Tracy really follows the energy markets, equity markets, Euro she follows. And, she's been joining us, bringing up some interesting technical analysis and market observations. How's it going, Tracy?
Oh, good. How are you guys?
Good. It's been active trading. I thought we'd start out by talking about energy markets, which, we're trading yesterday. API came out and we traded up to 72.50-ish sort of range, and here we are at 69.97. So what's the story?
Pretty much what happened is last week we had a big discrepancy between API and EIA. And at the end of the month, API has to reconcile with EIA. So that's why a lot of times you'll see large discrepancies between the two numbers. So in order to reconcile, they showed a draw. They showed a draw to reconcile their the number that was bigger than the actual EIA number yesterday, which I kind of tweeted out. I said, well, that reconciles last week's number, so we'll probably see a build in the EIA, which is exactly what we saw. We actually saw a larger build than I thought because of the hurricane. We had some production shut-ins. So, I thought that analysts' forecasts around, 2.15 or whatever it was going to be pretty accurate, but we actually ended up having a way larger build than that. Also today, we have OPEX. So, looking at OI and options, I pretty much think that they have 70 pinned for OPEX today. Or else we probably would have been down a lot more. So we'll kind of see what happens, as soon as this is released after OPEX today, which is, at settlement.
When's that released? Oh, I got option expiration. Oh, okay.
Yeah. OPEX.
Your technical term OPEX caught me off guard.
Sorry. So options expiration today at settlement. And we'll kind of see, probably be able to see then, are we released to go down more or, released to go up? That flag, there was a bear flag on the 4-hour this morning. I posted it in the commodities room.
It's interesting. I thought that the options for today, given that it was an option expiration and given that we had the DOE report, I thought the options were pretty small. Like we were looking before, I think on the AM call with Vince, we mentioned the 7150 straddle was trading at like 75 cents or something like that. Really, really small. And as it turns out, we just traded down to 69.63. We're back to $70 here, but
yeah. That's what I say. I think they have 70 pins only because I've been looking at it for the last week. And that seems to be, I call it like the pain area. Like I kind of look and see where is the most OI for calls and puts combined, right? So meaning that kind of the market's going to screw you both sides. So usually where the most OI is, and has been, generally that's where the market gravitates towards. I found, not always, but so, it's kind of like thanks for playing if you were, on the put side or the call side, and it kind of settles right in the middle there, then.
So what sort of signals are you going to look at after we get the options expiration to make you think if the next move is higher or lower in oil?
After OPEX, I'm going to look, we're going to see, that bear flag kind of played out. We came down, we hit the monthly VWAP. So we're going to see if that holds it or if we sort of get a bounce. But again, this market is in a seasonal downtrend. So I think any bounces are going to tend to get sold.
Yeah. Well,
and we have a lot of things, so far we haven't seen any reduction whatsoever in Iran exports. Tanker Trackers is a really good site that's, rather inexpensive, and they really do their homework. If you're interested in following, exports and everything like that, that's your kind of thing. They're pretty good for that and really reasonable for, the average person.
Sure. What about the Saudi news? How much is that affecting the markets here?
So, I don't think, everybody was freaking out over the weekend saying, we're going to, go up $5 and oh my God, they're going to threaten, use oil as a weapon, blah, blah, blah. But, we would have seen that initial reaction on Monday, and we saw virtually no reaction. So kind of, as things unfold, I mean, they've said they're not going to use it as a weapon. There was just a meeting Sarah Week in India. They reiterated that. I mean, they've, reiterated that a million times. Also, you got to understand that, all these, because of this journalist, a lot of these companies are now pulling out of, the Davos in the Sand, the FII summit that they have in Riyadh. Right. And they're pulling out of NEOM and things like that. So, Saudis need the money too. So, they're not going to intentionally cause a market spike and thus, detrimental to demand. I mean, they're going to want to start pumping as much as they can. They need the money.
Absolutely, and that's kind of the question, the chicken and the egg kind of fight behind the scenes is, who's going to blink or what they really want to do and, what sort of price and how much they want to pump sort of thing. And I guess that's right. What everybody's trying to figure out. Right.
So, I mean, as you can see, I mean, the markets, like I said, they come in, quelled the markets, said, we're not going to change anything. So, and this, we're seeing this sort of reaction. So again, I said last week, I'm still looking to sell bounces in oil purely because of seasonality, because we're going to start seeing, it's refinery maintenance season. So we're going to start seeing these builds. We'll start seeing these builds. And then, as far as when November comes, I mean, we're going to have to see about Iran, but we already have UAE, Syria, Turkey, China, and Russia, all that, are going to continue to buy. We'll just have to see how much they're buying. And, there's always black market, gray market things too. So,
yeah. Moving on to equity market, what do you think of yesterday's price action on a technical basis and where we stand now? Any sort of patterns that you're focusing on?
Well, I mean, I thought yesterday was ridiculous. And today, I mean, it just went straight up for no reason. And I really wasn't saying, because I kind of, I look at a lot of the internals in the market, and there really wasn't it wasn't like real buying. It was just being pushed up. And today we saw exactly a 50% retrace, and then we're back up again. So kind of have to see, this area, see if we go, are we going to go test, yesterday close at, what was it, 218, 28, 1650, and come back down, or, kind of what is happening. Also, all eyes are on FOMC minutes. Not, they're old minutes, but everybody's going to be kind of looking at the tone. Is Powell going to back down or not? Or is he going to, he going to kind of soften up on his stance because of all the criticism that he's been getting from
Well, that's what I think is interesting, actually. So this is minutes from, their last meeting, which was right. Kind of prior to...
it was sort of, but not really. I mean...
Yeah, because it was 100% priced in their hike. But, there's been a lot more criticism since, and these minutes that they're right. releasing now are old information. And that's why I think to kind of get a sense into a little bit, the minutes get you a little bit more behind the scenes look on what they're thinking, what they're saying, things like that. And so it could be interesting. And, the fact that yields had been kind of one of the big movers behind the equity volatility of last week, which... equity. That's the interesting thing. Yesterday, fixed income did nothing. Currencies did nothing right. yesterday, and even today, right now, the bond is down 1, the 10 years down 1. I mean, absolutely nothing. Couldn't be.
That's what I'm saying, which is ridiculous. This equity meme was like ridiculous.
Yeah,
I mean, I'm actually seeing some buying today. Everybody bought that 50% retrace, and on the things that I could see. But yesterday was just like relentless. There was no real buying. It was a crazy move. I mean, I could,
Yes, that's, Larry often looks for choppy sort of markets in a way similar to what we're seeing here, where, there's a move down, a move back up, move back down, move back up. You get that in higher volatility markets. Yesterday was a freight train just straight up. Anybody who had sold at any point, it was a freight train straight up.
Oh, yeah, absolutely. It was like the old grind, where you just never look back, which is kind of difficult to trade, unless I guess you're just long only. But um, obviously traders, if you're trading it,
Traders are,
you,
yeah,
you, you like a little more movement than just straight up.
exactly. You're not alone there. And, yeah, it's pretty interesting here. We got crude, which traded up to at one point up to 77. Seems like now that's being seen as that was a blow off, ran any of the last shorts out, and here we are now below $70. RBOB's down 2.5% today. Nat gas still trading pretty strong. It's at 3.25. So that's still doing pretty well. Corn, wheat, soy not doing a whole lot today. So I guess at 2 o'clock we're going to look towards the minutes. Do you think that the minutes, if there's something more hawkish, do you think that's something that can move the markets lower, and vice versa? If there's no sign of hawkishness, that's something more of a relief rally?
Yeah, I think so. I mean, I think possibly this move up, is kind of, either in anticipation of the Fed. I mean, there is a possibility that, if they're still very hawkish, that this market will sell off some.
Yeah.
I mean, it's, even though they're, it bugs me, they're like month-old minutes generally, but people are really going to be watching this one just because of, the criticism and things like that. And, a lot of people think, Powell, the market's up, Powell's on target. He's still going to maintain his stance and move forward just because of the way that he's been, throughout the past.
Sure.
So it'll be interesting to see what happens.
I'm seeing actually a headline here. Mueller investigation prepared to release core Russia findings to Rosenstein immediately after midterm elections. So looks like we aren't going to get the clarity before. We'll get some more information after. So that won't you won't get any fireworks, I guess, before affecting the elections. Okay.
Well, of course. I feel like everything's on hold until after this election's over. Like they don't want the market to tank before the election's over. They can't have oil over 70 before this
And
election's
same thing,
over.
and China's not going to give in anything before the election's over either.
Right, exactly. So
what about also when you take a look at your charts? Anything else stick out? Any markets that kind of have an interesting setup, whether it be Fibonacci, moving averages, trend lines?
I mean, I don't really look at a ton of markets.
I know you try to keep it to 4 or 5 markets.
But I mean, still watching things like copper. Copper's kind of indicative of the Chinese market. It seems that still there's not a lot of confidence in the Chinese market. Also, I mean, you can see that they sold off again today. India looks terrible today too. By the end of the day, so people are still watching those emerging markets. Copper actually fundamentals are very strong, but it still can't really catch a bid. So to me, that says a lot about kind of what's going on in China and what people's expectations of China are. So that's something to watch. Also, something to watch, if you're watching sort of the broader markets and things like that, or commodity-wise, I would be watching iron ore, because I think as soon as that really starts to sell off, that's going to be, that's a sign China's cracking, which in turn will, believe it or not, affect, oil and lots of other commodities. So, that's something, I also watch is iron ore for sort of broader commodity market trades as well.
Yeah, that's really interesting. And just trading, being a currency trader, iron ore is highly correlated with the Aussie dollar for a lot of those reasons, because Aussie is a commodity currency, and that one is oftentimes, an esoteric sort of commodity to watch, because it really does have a lot of high correlation with a lot of different commodities and economy. Interesting. Anything else on the radar?
Not really. I mean, that gold finally broke out of that pattern that I showed last time we spoke, that broadening wedge, descending wedge. I think I showed a chart last time.
Yeah.
So we did did finally break out. So we're kind of in that, I know this is census territory, but we're in that 1230 area. Really, the next HDN I would be looking at is around 1240, 1250 area. And then I don't really, I mean, if it makes it up there, I'm not sure how much theme it would have after that. So that's kind of an area that I would be watching, more on a broader sense. I'm not, I don't trade gold intraday or anything.
Yeah. No. Well, gold hasn't really been a whole lot. It's had that breakout, and then here we are hovering at 1230, which the bulls will argue is very bullish price action after a large breakout, and bears will also argue it's still down significantly here, and this is nothing more than a pop. So we'll keep a close eye on that. All right. Well, thanks a lot for joining us. A lot of great information. Yep. Keep us up to date in the chat room as you always do. We really appreciate it.
All right. Thanks.
Thank you. Talk to you soon.